Welcome to Trading Nation. I'm Courtney Reagan. Take a look at this under the radar winner, up 250% in the past 12 months. And that stock is, drumroll, CROCS. Yeah, the shoe retailer rallying again Thursday after posting quarterly revenue nearly double a year ago. And it's sprinting, not walking, in its current quarter, expecting another 60% sales growth. I'm joined by Gina Sanchez of Chantico Global and Lido Advisors and Bill Baruch of Blue Line Capital. Gina, I'm going to start with you on the fundamental outlook here for CROCS. I am amazed at how the stock continues to outperform. I know they're bigger with kids, but they must be bigger with more than just kids.
Well, who knew they had such an incredible trajectory? And they are so cheap relative to other retailers, particularly footwear. You know, they're trading at 20 times forward PE, 22 times trailing, which is to say that they're expecting great growth. And that growth is not yet priced into the stock. And you know, what's interesting is that children's market is always interesting because it's sort of a naturally regenerative market, one where you're constantly buying. But, you know, the fact is they have expanded their whole retail line across the adult market as well. And so this is, interestingly, a stock you shouldn't underestimate.
It is so interesting, you know, how these things come around, trend or not, and sometimes they stick around. Bill, what do you think? Is this a trend stock? What does the trend line of CROCS actually tell you about the price action to come?
Well, it's absolutely trending higher, and it caught my attention in 2019 when it was about to break out. I also saw a company called Likefolio that analyzes social data for market trends, and they were all over this thing. They were all over it in 2019. Unfortunately, I didn't follow the recommendation and buy it. I was waiting for a better price, and then I slept on the pandemic pullback, and before I knew it, this thing was roaring higher last year. So I don't own it, but the company has done everything right. And you know, everything from celebrity sponsors, they've done a great e-commerce pivot during the pandemic, and another great earnings report here with accelerating growth. Now, I do think that there is a place to buy here. I'm looking at the technicals in the chart. I'm going to be more patient. You know, you're more likely to find me wearing CROCS by the end of the summer than you are to find me in this stock, because I'm looking for about 92, and I don't think we'll get down there. This move here is out above 120 is a new breakout, to a new level, and out above there, you know, that's a gap close. They're going to find good support there. If you break below 120, though, we could shop around a bit between 110 and 120. Now, the ADX, which gives you a sort of a momentum, it's indicators average directional index. There was really no direction in the stock before today, before it broke out. So we could find it sort of falls below 120, still chop around in there. Now, I would look if it does go lower and start breaking below that previous low. There's a lot of support at 92, 90, and the 200-day moving average that could be rising. That's where I would look to really enter this stock for the long term. I don't think we'll get there, like I said, more likely to be in the shoes than in the company.